Introduction to Advanced Fidelity Bond Investing. Investing in Fidelity bonds can be a great way to diversify your portfolio and generate returns. A Fidelity bond is a type of insurance policy that protects against losses due to employee dishonesty, theft, or other malicious acts. In this guide, we will walk you through the advanced concepts of Fidelity bond investing, providing you with the knowledge and tools you need to make informed investment decisions. Understanding Fidelity bond types. There are several types of Fidelity bonds available, including standard Fidelity bonds, blanket Fidelity bonds, and excess Fidelity bonds. Standard Fidelity bonds provide coverage for a specific employee or group of employees, while blanket Fidelity bonds provide coverage for all employees. Excess Fidelity bonds provide additional coverage above a certain threshold. Evaluating Fidelity bond risks. When evaluating Fidelity bond investments, it is essential to consider the level of risk involved. This includes assessing the creditworthiness of the bond issuer, the likelihood of employee dishonesty, and the potential for losses. Investors should also consider the bond's terms, including the coverage amount, deductible, and premium. Investment strategies. There are several investment strategies that can be employed when investing in Fidelity bonds. These include diversifying your portfolio by investing in a mix of standard, blanket, and excess Fidelity bonds, as well as investing in bonds with different coverage amounts and terms. Investors can also consider investing in Fidelity bond funds, which provide a diversified portfolio of bonds. Best practices for Fidelity bond investing. To maximize returns and minimize risks, investors should follow several best practices. These include conducting thorough research on the bond issuer and the bond's terms, diversifying your portfolio, and regularly reviewing and adjusting your investment strategy. Investors should also consider working with a financial advisor or investment professional to ensure they are making informed investment decisions. Conclusion. Investing in Fidelity bonds can be a great way to generate returns and diversify your portfolio. By understanding the different types of Fidelity bonds, evaluating risks, and employing effective investment strategies, investors can make informed decisions and maximize their returns. Remember to always conduct thorough research, diversify your portfolio, and regularly review and adjust your investment strategy to ensure success in Fidelity bond investing.